Good morning and welcome to another Five with Fitz. I'm Keith Fitz-Gerald and I'm really excited this week because all three indices are in the green as I record this as a plan to end the longest U.S. government shutdown on record begins moving through Congress. Now, and like many, I'll take it. I'm sure you will too. However, I am not exactly holding my breath either. As I noted in last night's short, I think there could yet be some shenanigans before the Bears get banished for another run higher. It would be absolutely par for the course for somebody in Congress to throw a wrench in things before a deal gets inked at the last minute. Just saying. Anyway, here's something to think about. Patience and discipline are two of the most undervalued assets in today's markets. And not for nothing, at the same time, potentially a source of huge profit potential for everybody who understands what I just said. Here's my playbook today. Number one, the question, of course, are we back in rally mode? Now, I spoke with the super smart Stuart Varney ahead of today's opening bell, who asked me whether we're back in rally mode after a bout of some super nasty selling. My answer, perhaps. And you can watch that video elsewhere on my channel. Please do, by the way, because it's important that we make this transition. Keith's investing tip in this department is very straightforward. The markets hate uncertainty, but they love clarity more. And thankfully, we're starting to get some of that again. History shows that is, by the way, almost always a very investable transition, which is why you want to pay attention. Now, because I can't help myself, here's a trading idea, not an investing idea, a trading idea. In fact, an ultra short-term, ultra speculative trading idea to buy at the money puts, a bet that prices decrease on the SPX, the S&P 500, in case traders fade the current rally or Congress does, in fact, throw a spanner into things. It's probably best to put these things on in the last hour. So, thinking about it. All right, number two, please don't make this mistake because it could kill your portfolio. Now, I'm reminded of this every time we get a bout of nasty selling and the markets look like they could turn around. 99% of all investors don't even remotely realize that they're making this mistake. What is it? What is the mistake? Well, one of the biggest single portfolio killers of all. I am often asked for the hottest stocks, particularly when there's a big, nasty, super scary decline like there was last week and the markets start to reverse higher like they have this week. Wrong question. What you want to do is ask yourself which stocks will be there when you need them, even decades from now, and buy accordingly, especially if they've been hit hard in the latest sell-off du jour. Now, this is the interesting part, right? Not all tech is the same, not all AI is the same, but the rallies, yeah, quantitatively speaking, those tend to be the same. Number three, buying more Palantir. Now, I said on air last week that I'd be hesitant to buy Palantir ahead of earnings, but I would instead buy it afterwards because I expected the stock to fall. Now, that happened. So I did. And not for nothing, I hope you did too. Palantir is not a company in trouble. Palantir is projecting revenue of $4.396 to $4.4 billion full year. Free cash flow may hit 1.9 to 2.1 billion. Total contract value hit a record $2.76 billion, folks, a 151% year-over-year jump. Now, the Michael Burry situation that caused arguably all of this is very, very unfortunate, but it is something that'll pass. Stay focused. I think Palantir will take out $200 again, and then once that holds, I expect it to be 3 to 5x over the next 3 to 5 years. Straightforward. You know what to do. Now, Keith's investing tip. Think about this for a second. Fear is always loud. Patience is almost always quiet. That's why the biggest winners are almost inevitably those who treat volatility for what it is, a sale rack at your favorite store. Number four, another Costco split on the horizon. Now, Costco's been split resistant for nearly 25 years, focusing instead on steady dividends that keep both members and shareholders loyal. Even so, and with the stock up nearly 3,000%, some odd percent, I think it's like 2,800%, if my memory holds, since close enough for 3,000. Since the last split in 2000, I can't help but wonder if the stock will split within the next 12 months. Now, at around a solid 50 PE, Costco still looks really, really terrific to me. Roughly 20% upside to the average target that's near 1088. My target's about 1100 bucks, so it's higher, of course, but that's a topic for another time. What catches my attention and one I bring to yours is that sales momentum is accelerating around 15%. Margins are expanding and membership loyalty remains world class. Add in growing international operations, private labels, and a smart push into AI and online sales. It is hard not to smile, at least for me anyway. Costco has returned nearly 117% since I first brought it to the OBA family's attention, compared to a great 54%, which is still far less from the S&P 500. If you're doing the math like I am, that's roughly 2.2x performance advantage. Now, I happen to think there's still plenty of fuel in the tank, so to speak. Now, if you're not enjoying performance like that, by the way, and that kind of profit potential does sound appealing, you might enjoy becoming a member of the One Bar Ahead family. Folks tell me that it has given them unprecedented confidence and helped them be successful in the markets, many for the first time in their lives, something I find very incredibly humbling, by the way. But here's the deal, Keith's investment tip in this department. People want to make investing complicated, but it's not rocket science. And neither is the kind of life-changing profit potential that we're talking about, in my humble opinion. So I'll be here if you need me. And by the way, a tip of the hat in your direction if you've got this covered. And number 5 today, something very, very important, the greatest financial lesson of life. Imagine you've got a great job. You own a home, a car, and things are going along smoothly. Then whammo, life happens. What do? How do you think about it? Which steps can you take to get through it right now unscathed? And what can you learn from the experience? Well, the venerable Susie Orman has a few answers, which is why I encourage you to spend a few moments today listening to her latest episode of the award-winning Women and Money podcast. Now, my bride and I are huge fans, and we have learned a ton over the years. Still do, in fact, the learning part. Now, this weekend, Susie tackled one of the single most important issues of all. How do you plan for and get through the what ifs in life? Now, I don't think that gets talked about nearly as often as it should, which is why, of course, so many people wind up getting pinched when they least expect it. Now, Susie encourages you to flip that around, and I agree. Plan for the what ifs first, then everything else falls into place, and you can get right through many of life's unexpected challenges. To quote Susie, there is not an excuse strong enough to keep you from being who you are meant to be, end quote. While we're at it, and speaking of which, Susie very graciously invited yours truly back on this latest episode for a discussion on what the heck happened to Palantir last week. And hint, spoiler alert, it's not what everybody thinks or the headlines would have you believe. Turns out that what's happening behind the scenes is far more important and understandable than you'd think. So anyway, I hope you tune in for a minute. Today's bottom line, the markets are great at making you uncomfortable in the short term if you're in them, and the best in the world at making you uncomfortable longer term if you're not. You got this, I promise. As always, let's make it a great day and start the week strong. I will see you again tomorrow. Thanks for watching. Cheers.